Hi, I'm Professor Wheeler at the University of South Florida School of Accountancy, and in this video I'm going to talk to you about Enterprise Resource Planning Systems, known as ERP.
Enterprise Resource Planning Systems, or ERP systems, an introduction. In this session, I want to distinguish between enterprise systems and enterprise resource planning systems. I want to discuss some of the shortcomings of pre-ERP systems, and then I want to talk about ERP systems and their advantages. Okay, let's distinguish two basic terms: enterprise systems and enterprise resource planning systems, or ERP systems. An enterprise system integrates and automates. That is, by integration we mean coordinating all the major business functions of a company, and by automation we mean doing this coordination through computers. ERP systems are simply a subset of enterprise systems. ERPs are the current state-of-the-art in business information systems. They are used by all of the Fortune 500. Typical examples of ERP system providers are SAP, Oracle, PeopleSoft, Microsoft Dynamics. Okay, let's discuss a little further the underlying idea of an enterprise system. What do we mean by the basic or major business functions? We mean those business functions that all companies share. For example, producing revenue, having expenses, going through conversion or manufacturing, labor cost, HR, payroll, accounting, management. And the enterprise system, remember, integrates all of these functions into a single information system. Now, this is made possible through certain technological advances over the past decades, such as real-time databases, the rise of networks, and various programming improvements. The two main purposes of this integrated business information system are to improve the efficiency of operations and improve the effectiveness of management. Okay, here's an example of integrated business process functionality using inventory ordering as our example. When purchasing office equipment, an enterprise system can provide operational integration. It can provide electronic purchase order forms. It can apply business rules to filling out those purchase orders. It can automatically route the purchase orders for internal approval, and then over the internet it can send the purchase order to the vendor. The enterprise system also can provide for management integration. Management can use the data from our purchase order transaction to help project funding requirements in the future, to compare how we're doing with the budget, and to analyze vendor performance. Let's take a look at a typical pre-ERP system used in businesses, that is, before ERP systems came about. Specifically, we want to think about the limitations of these pre-ERP systems. Okay, you'll notice our diagram here. We have these various squares. These represent computer applications, for example, order entry, manufacturing, procurement. We see some outside computer processes connecting us to the customers and suppliers. These drums represent databases that support the applications. Now, one thing we want to notice are these spaces between the applications and the databases, and that represents a lack of integration. It usually means some kind of secondary patchwork software has to be applied to connect these different applications together, and usually the connections are not optimal. The same with the databases. We have 3 different databases which can result in redundancy of data. Also, these connections outside the company are usually not as effective as they could be. So let's kind of summarize our weaknesses. Poor integration because of these separate applications not being properly patched together. We still retain a lot of manual processes, which means a lot of paperwork is flowing between the different departments in the company. And because we have these separate databases, there's a lack of data sharing within the company. Problems with pre-ERP systems, limited connectivity outside the company to vendors and customers, tendency towards separate information systems within the firm. There's a lack of integration that leads to limited communication within the company. Often this affects the reliability of the data or information needed to conduct business transactions. IT is not being used as a leverage to improve operations. Instead, it's mainly just automating manual processes. Management decision making is poorly supported. Because these are old systems, the maintenance costs are high, and they limit the company's ability to engage in change, or what's often called business process reengineering. So let's see how ERP systems help us solve these problems. So what is an ERP system? It is a multi-module application software for managing the different parts of a business in an integrated fashion. It provides smooth, real-time, and seamless flow of information across and beyond the organizational boundaries. Business processes are standardized. There's integration of all computing applications and data processing within the company. They use one centralized database, independent of applications and modules. And the data can be shared and used by all people in the company if they're authorized. So again, we go back to a diagram, somewhat like our pre-ERP system diagram, but you'll notice some differences this time. First, notice there aren't any gaps here in these squares and rectangles, these computer applications. Everything is well integrated through this one ERP system. We see here the core processes, those basic business functions like revenue, expenditures, HR. And each of these represents a separate module, and a module is just a packet of programming that has the best practices for conducting that business process, like sales and distribution. So each module is kind of a pre-canned application that the company can buy and install. So here we see they have their basic core functions. They're all nicely integrated and standardized. There's no gaps between them, no patching. In ERP, that's called the Online Transaction Processing System, OLTP. And you'll notice there's one database, not three. So there's good sharing of data. Management is supported with its own little square rectangle up here application called OLAP, Online Analytical Processing. So good support of management decision making. And then typically there's going to be some kind of additional modules provided that are kind of specialized to that particular industry or company that's not provided by the main ERP vendor. In practice, usually the ERP systems we find have some additional features a little bit beyond the basic ERP system. They have the internet connections to suppliers and vendors. In addition to the operational database, there's usually a separate data warehouse that management uses with OLAP, where there's lots and lots of data from different sources, not just from the operational database, which periodically is dumped into the data warehouse. And then there may be something left over from that pre-ERP system called the legacy system that the company wanted to keep for whatever reason. And it's linked into the ERP system also. Okay, let's finish up. Problems with pre-ERP systems are solved. We have good connectivity outside the company to our vendors and customers. We have a highly integrated system of applications within the firm, good communications within the company, very reliable information for our operations. We are using IT to improve operations and not just to automate manual functions. Excellent support of management decision making. Remember our OLAP and our data warehouse. Maintenance costs are typically reduced. And usually in the ERP implementation process, a company undergoes changes, that is business process reengineering. Thank you.